So the follow-up question is, what are your expectations from the merged entity of HDFC Limited and HDFC Bank?
So firstly, it frees up some capital. So when HDFC Limited owns HDFC Bank, HDFC Insurance, and all of these companies, it has to maintain capital adequacy after removing all those assets from its capital. So once the multi-layer holding company structure is removed, at least to the extent of their owning of HDFC Bank, some capital gets freed up. That is one. Secondly, arguably their cost of funds will be lower given that they have access to low-cost banking float funds and low-cost bank FDs as compared to the company FDs that they would raise money from and NCDs. There will be some other things like having to maintain a SLR, CRR, having some priority sector lending requirements and stuff like that. People have been negative on that aspect. I don't think that is so much of an issue because even now SLR yields are somewhat higher than the deposit rates that they are paying. So I don't think that is so much of an issue. Priority sector lending, I think they can manage. CRR, again, not so much of a big deal. So all in all, I think it would be beneficial for the company longer term. Post-merger, there will be some merger expenses to account for, some HR integration expenses, some system integration expenses. So maybe 6 months post the merger will be tough. I think after that things should be fine, and it's part of the same group and they have had more or less the same culture, and they know this is coming up and they have had a long time to prepare for the transition. I don't think there's much to worry.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.